What do the moves signal to you amidst all this commentary about the U.S. economy being okay now, but maybe not for long? Guy.
Actually, it sort of made sense to me, and I'm not pretending I knew it was coming. But J.P. Morgan, Jamie Dimon said his stock is expensive. We've talked about that. Almost 3 times tangible book. It is a little bit expensive. Thinking of former Wells Fargo, it's a re-rating. Wells was in the penalty box for years. They're finally starting to get out of that penalty box, self-inflicted, by the way. So now at little more than 2 times tangible book, maybe that's where it should be. Citibank, I think we've collectively talked about just being cheap to its peers. We thought somewhere between 102 and 105. It got there. So it all made sense. I will say that I thought the quarters across the board were very good. But I think, in my opinion, and Jamie Dimon spoke to this, a lot of it might be priced in on certain metrics.
But in terms of what the earnings and what the commentary is saying about the economy, I thought in the markets, I thought that was particularly interesting during a time where we're not getting any economic data except for a CPI report due in a week or so.
Well, I mean, Jamie Dimon always tends to be more conservative, more pessimistic. Yes, conservative, and this was no different. I think they're all seeing that. We'll get to it more later, but they're all, for their environment, their world, it's pretty good. Yeah. So to translate that to more broadly, I still think that there is a sense of optimism about business, and deregulation, I think, is a lot of that. Even though there's not so much clarity at the moment, I still think that backdrop is in place. Yeah, Solomon's comment was interesting, too, in terms of the markets. There's no question that there's a fair amount of investor exuberance in the markets right now, which, read between the lines, I think overvalued or, fully valued.
No, it was kind of his irrational exuberance line. But I thought he tempered that. I thought his comments of all the CEOs were the most interesting. He also said, this is a time strategically we think we can get things done. And I think that's interesting. I think it's an environment where I listen to the CEOs, and maybe more importantly, I listen to the numbers, and I listen to where we had actually reports of businesses that were growing. I mean, think about what we've had this year. We've had the largest LBO ever. We've had a dynamic where they mentioned financing activity is increasing. We have this dynamic that we talk about seemingly every night in terms of what the AI build-out will cost to finance. And you can be sure these banks are licking their chops. The fact of the matter is Goldman's had its most profitable year ever in the history of, I would argue, the most storied bank on Wall Street, says a lot. So the environment, to me, I think says a lot about the economy. When I hear financing activity and I hear their core M&A business is alive and well, that tells me people are doing deals.
I felt like the CEOs from the banks are more optimistic. Powell is more cautiously optimistic, which means that he's more likely to cut rates, which means that all stocks should be optimistic. So I think it's a circular event. I think the market probably goes higher, but I think we have to deal with October being sort of a headwindy month for the overall market. Yeah, I mean, the lack of jobs data and sort of the downside risks to the job market highlighted by Chair Powell as well as Jamie Dimon in his commentary. I mean, I think the question here, too, is how much can deregulation overcome, and the ability to get things done, the ability to get deals done, how much can that spur the economy versus what is actually underlying, which is sort of the low hiring, low firing, stagnant nature of the jobs market right now, which could have downside. Right. Well, a couple of things. For a deal maker to be able to get deals done, that is that's very specific to them. I think they sort of look past. We will get data soon. If we could just wait maybe 1 month more, I think we should be past this. So I'm not so concerned about that. I do think also, though, from the One Big Beautiful Bill, the depreciation on capital expenditures is actually a very important thing and a significant driver for the economy. Yeah.